This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro, and I'm going to give you a stock market update as of Thursday's close for Friday morning. Let's go ahead and get into this before we head into the long weekend. So we'll start with the market conditions and just run through these pretty quick. The sentiment did not change that much. We've got a few more bulls, and the difference between the two has moved up to 23%. As I mentioned, I'd like to see this closer to 30. If we get in the 30s, then you definitely want to start thinking more defensively. When we look at the overbought, oversold oscillator, I put a D here because there is a little mini divergence. We're making a little minor higher high and a slightly lower high in the RSI 5 on the weekly chart of the S&P. So you could argue that there's a little bit of a divergence there, and we've already started down, so it is more of a neutral pattern now. Even though I've got this in the negative camp, I have that because it's because of the divergence that's in place. So we want to be aware of that, especially based on the fact that the market has a failed new high. I'll get into that in a second. But one of the things I do want to cover, I do want to go through a couple of different indices today. I don't want to just focus on the S&P because I think what's going on is pretty important in the fact that there's such a disparity between some indexes. Some are going down and some are going up. What seems like it should be a strong day really isn't all that strong. So if we go through this, the volatility is still the most bullish part of this really of all the market conditions, because we don't really have any momentum in place, and now we've only got a weekly trend that's up, and it's really doesn't have much momentum behind it. The monthly and the weekly, monthly and the daily trends are neutral. So this is really the most bullish aspect to the market conditions, the way that I lay them out. And you can see that both the average true ranges just don't want to turn to the upside. We're not seeing a true expansion of volatility, which tends to lead to more risk in the market. So, I mean, we have to accept that and sort of respect it. It doesn't necessarily mean that we can't start dropping here without the average true range being up. But I would tell you, historically speaking, the higher percentage play is for the average true range of an index to increase prior to we seeing any kind of a real big drop. All right, we're going to go through the, so I've got the S&P up, but I am going to go through a number of different indices today. I just kind of want to bring you up to speed with everything that's going on. We know that we have an S&P that has tried to break out and do this, complete the 1, 2, 3. What I mentioned last Friday was I wanted to see follow through here, and I was really talking on the daily chart, but the reality is that this didn't really close. Well, it did close above this prior peak, but not to any significant degree. It was by, you know, a dollar or two in an S&P, not on the Spider. The Spider, it was cents, but on the S&P, it was a couple dollars. So we haven't had a really solid close above this line. I think that's a problem because we don't really have good momentum in place. You see how the DI, let's just zero in on that. Look at how the DI made a lower high again. So this has made another minor higher high. This is making another lower high. So we've made a peak here and then another peak here, and then we just made a slightly higher high here. But these are dropping. These are making lower highs. We're not seeing buyers truly step in, at least not on this index. So everything stays the same from last week. I mean, we looked like we were breaking out. We looked like we had MACD turning up. We looked like we had green DI kicking in, and green DI is still holding its ground here. It hasn't actually, believe it or not, even with that big drop, it's still holding its ground. It's still in a position to kind of maybe potentially follow through. The problem I've got is as we go through these other indexes is where the problem comes in. So let's just look. So we know the Qs, which is representative of, you know, the big cap names that are making the biggest moves right now. And obviously NVIDIA had a lot to do with what happened today in the move that took place. This does have better momentum. I mean, we can see that on the weekly. We've already got the ADX crossing above 25. We've got green DI confirming this move. We've also got daily. Look at the DI line and see what this has been doing. Higher, 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 higher. The first time that doesn't happen, that's where we need to be concerned. Okay, so we're making higher highs and higher lows, just like if you were in a stock. We keep on doing this. Every time it makes a higher high, we want to see if the green DI confirms. The moment it doesn't, then you start to, if you're looking at this index, you'd start to tighten up the stop and know that if we turn that down or take out a prior bar's low without confirmation, that we're probably reaching some kind of a short to intermediate term peak, just based on how big of a move that it's made. So that's what we want to be on the lookout for there. The interesting thing is, because we're trying to clear this 335 area, if it gets through that, there is some room if this wants to do some kind of real acceleration. But I'm just going to show you this really quick in case you didn't see it. I'm sure most of you have. But what this did, NVIDIA, is just crazy. Just an amazing move for a stock this big to be up 25%. So, I mean, it's just kind of rare. But the crazy thing about it is, one of the biggest stocks in the world, and is now what, $1 trillion company they're saying NVIDIA is, and the NASDAQ 100 is up 2.5% today almost, and yet the Dow Jones is down today. The Dow Jones Industrial Average is down today, okay? And it was down for the week. Look at the weekly bar, right? I mean, so the interesting thing is that this would not take very much to get this going. If this thing could turn back up and come back up through here, we have a little trend line we can draw in like this. This could look pretty good, but there just doesn't seem to be any interest in these stocks right now. So we need to see that turn around, and I think we're going to need to see confirmation from these other indexes. It can't just be one single index. Here's the worst. This is even worse. Look at what the Russell 1000 did. This is Russell 2000. These are the smaller cap stocks, down almost 1%, about 0.75% today. So I've said this many, many times. You can't really expect the market to do something significant, the overall market to do something significant to the upside in it. And I'm not saying that it can't go up. And what I mean by significant, it means where you can go out and buy stocks and make money. Okay, it's like we have to have a broad market to be able, where we have enough stocks participating where you can go find patterns and really make serious money, where it's a good opportunity for you. It doesn't mean the S&P and the NASDAQ couldn't keep climbing, but if this index keeps wallowing around like this and we're not seeing any participation, it's a very high risk environment and it's incredibly narrow. I mean, essentially, if you weren't in some semiconductors today or some other big cap tech stocks, it would have been pretty hard to make money. And I'll just show you this. Look at what happened. So let's just focus in on the XLB. Look at this. This is down. This is the week so far in the XLB. You see this big red bar? Okay. Look at XLE. XLE hasn't really done anything, but it's been in a downtrend. It's kind of down near its lows. XLF, a down week after a pause week. Okay. XLI, a down week after a pause week. There's your XLK taking off like a rocket. Look at what they've done to the consumer staples. They're killing these stocks, okay? XLRE, the real estate. Look at what this sector is doing. They've been dropping week after week, okay? Look at what happened to the XLV, the healthcare this week. You see the drop? Look at what the utilities are doing. All right, and then we have the XLY, which actually looked like it was trying to trade, maybe potentially trade up a little bit, and that's had a down week as well. So we have to recognize this. Now, the XLC is another one that's been doing okay. It's not breaking any records this week. In fact, it is down this week, which is actually surprising. This ended up closing down. So if we want to, let me see if I can show you this. Yeah, you can see, look at the sectors, and you can't see the percentage, but this was down 26 cents. This was down 3 cents. This was down $1.50, down just a fraction. XLI was up a little bit. XLRE was up a little bit. This was up $5-6. You see what I'm saying? Like, it was a pretty good move for the S&P today. Did you see how the S&P was up almost 1% today? almost the entire move is the XLK, the technology sector. So why am I spending all this time on this? Well, I think it's really important when you go and you look at what's taking place and you're trying to make money, unless you're going to buy the indexes, which a lot of people like to do, but I don't. I think you can make more money in the individual stocks when you have the right environment. But you have to accept the fact right now that the environment of stocks that's really working higher is narrow. Now, I go through thousands and thousands of charts. I try and send out a decent amount of stocks on Wednesday to my subscribers that, yeah, okay, so I can find some stocks if I look at enough names. But we should not have to have that hard of a time. I can tell you this, when I do shows for Stock Charts TV, like Your Daily 5 and The Pitch, and like I did this week, I shouldn't have to go through thousands and thousands of charts to find 5 stocks. And that's what it felt like this week. Normally, I can't get out of the A's, and I've already found 5 stocks. So just the fact that it's been, for me, a little bit more difficult to find quality names. I mean, I want A+ names when I'm going to show up on a show like that. And if I'm going to send stuff to my subscribers, they're all going to be B+ or better. Anything that's going to show up in anything in the subscriber list has got to be B+ or better. So I've got to go through a lot of stocks to be able to do that. So anyway, I just wanted to make sure I got this across. Yes, the NASDAQ had a huge day. Yes, the S&P had a good day. Yes, the S&P is trying to break out. But if we don't get improvement out of the Russell 2000, if we don't get improvement out of the Dow Jones Industrials and a broader list of sectors, I think this is going to continue to be a really difficult environment to make money. All right. So anyway, that's the update for the week. Go ahead and let me know if you have any questions or comments. Thanks.